Hey there, welcome to your quarterly financial insights. Me and my team have been through your free agent account. When we complete your VAT return, we checked that everything was accurate. We looked at the expenses you were processing, etc. So we're happy with the accuracy of the data. So now it's time to talk you through what that means for you. So if we have a little look at your dashboard here, we can see that in total you have just over £22,708.19 available to be drawn out. Now, obviously, there are two of you in the company. So, Joe and Jill, you are both owed money slightly separately. So, Joe, you have salary available and some expenses. Jill, you just have £325 in expenses. Obviously, you're not a shareholder, Jill, so you don't get access to dividends. Only Joe does. So we can see at the top that how that's made up, that 22,000 or almost 23. You've got £9,741 available in dividends. So that's taking your profit after corporation tax. We've got your salary there and your expenses. We'll come back to those in a second. So what we want to do is just have a little look at what the business has available and what it owes as well. So there's no trade debtors. So it means you've got no sales invoices outstanding. So that's good. You've got no loan balances. You did have your bounce back loan, but you repaid that. There is an overdrawn director's loan balance of £1,000. So Joe, that's sitting on your account. So what that means is at the moment you've taken out £1,000 more than you should have done, or that's been allocated to your loan account. So that will need repaying. It's under the 10,000 limit, so it doesn't have taxable consequences at the moment. But if it goes beyond the 9 months after your year end, then there will be further tax consequences to deal with on that. So our advice is to get that repaid as soon as possible. You could either pay the £1,000 back into the company, or actually, if we look, you've got plenty of dividends available, so you might want to declare a dividend for £1,000, not draw the cash out and just offset it against the director's loan. So we'll leave those choices with you, and if you want to discuss those in further detail, let us know. The bank balance is very healthy at 69,000. So if we look at the taxes that are available, that are currently due, I should say, for the business, you've got a fraction under £1,000 for PAYE. So that's the next tax coming up. That's due on the 19th of July. Then your VAT is due on the 7th of August. So that's a little under 20,000. You can see there. So both of those, we need to make sure that you've got that money set aside. Currently got 69,000, so that's fine. You've got more than enough to cover that. There's no corporation tax owed for your year that's already ended, so this October. But the year that we're currently in, we're building up towards, the provision at the moment is £15,942. So we haven't finished that year yet, so that's going to change, and we'll keep you updated on that as we go along. But that's not due to October 24, so you've got plenty of time there, but it's always good to make sure you've got enough available. What we can see, though, is with your bank balance, if you set aside all that money for taxes, you've still got the money available to draw the maximum that's available funds at the moment. So it's up to you how much of that you draw down on. What you do have to remember is that salary and expenses, fine. There's no further tax consequences of those. But for your dividends, you will have personal tax to pay on those, potentially when you draw money out of the business. So let me just show you what that might look like. This is on the basis of your only income being in the limited company, which is the instructions that you've given to us. So if you do have other income outside the limited company, it's really important that you talk to us about that, and we can factor that into our tax planning. But if we have a quick look at the tax calculator, so obviously, Joe, you're the only person that receives dividends. We can see that you've already taken out or declared 50,000 in dividends in this current tax year. We know what your gross salary is that you've decided to set, 12,570. So you're already going to have income tax for this year of £7,362. Obviously, we're quite early on in the year as well, so it's likely that that's going to go up. So if we were to put in, say, £10,000, you could see the effect that has. £10,737.50. So yeah, so there are tax consequences of taking those dividends out. It's really important that you understand that. What I would say to you is that give us an estimate of what you expect to take out in dividends over the rest of the year, and we can plug that number in and show you what that looks like in terms of your actual dividends date and the current dividends up to the 5th of April as well. If you have any questions on any of the information in here, or you're not quite sure about what we've gone through, then do reach out to us. It's really important that you understand this and you use this information to make the decisions for your company. See you soon.